Futures trading is risky and can result in substantial financial loss. Never put a futures position on without a stop-loss order in place.
Good morning, good afternoon, good evening, traders from all around the world. Welcome to Short Term Trading Live with Oscar. Whoa, this week is getting tough. I'm going to start taking this personally soon. We're getting hit every day, but you know what? That doesn't tatter me. It shouldn't tatter you. We do have a long-term view. I've been through this before many times in my career. Every good batter in the Major League has a batting slump. We're in the Major Leagues here. This is the brass ring. Every good trader has their trading slump, so sit tight. But you got to come out every day with your sword and shield. You cannot back down. I'm certainly not gonna. In fact, I think I found something fantastic for us. I'm going to show you a couple of charts on the computer only because my chicken scratch is so bad. But if you see it here, then at least you can relate to what I have to show you. So anyway, I'm going to point out the two charts. Just take a look at the basic construction of the charts. And then I've reconstructed them up here on the whiteboard. This is the Feb Gold chart. Feb Gold has this major resistance line running right here. We've hit it. We've hit it back here. We hit it again here. We hit it again here. Strange, it just can't seem to get above that. There's also this thing going on lately with the 200-day moving average. We can't seem to spend 3 days above it without a drop. So we got a couple of good reasons here. Plus, I got all my technical reasons. There's a lot of reasons. Anyway, enough of that. Let's go. Next chart. Just make sure you look at the construction. This is what that board's supposed to look like in a minute. Okay. Next, we're going to take a look at this S&P chart. Boom. 1, 2, 3. Very interesting. We have something to talk about. I can say that when a chart starts at the bottom left side of my screen and goes to the top right, I'm certainly not a bear. But a good technician also has to realize when a major signal could be presenting itself. That's going to be the basis of what's on that board behind his computer. Now let's get to that. We'll see what we can do. Okay, that S&P chart that I just showed you here is this. Don't laugh, but hey, it'll do some good work for you. Watch. We have what could be shaping up into being a picture-perfect textbook triple top, which is kind of rare to see. You see head and shoulders tops often. Triple tops at the same level, that's something that you don't see as often. That's usually a powerful indicator. As I said, looking at the screen, when a market looks like this on my screen, I'm not bearish. I have a bullish tendency. Call me crazy, I don't know. But when it puts in a signal like this, that's something a technician should take a notice to. And boy, we hit top number 1, top number 2, top number 3, and then we broke. Instead of us taking out this high like we were planning on happening today, I thought we'd end up here somewhere. Instead, this thing took off to the downside. That is a total failure. That changes the picture of this bullish market, possibly, and I'll explain to you why. With these 3 tops here, if we take out this first trough right here, which is around 1420. We take that out. The only support we have left is 1412.20. When we take that out and settle for 2 days, if we settle for 2 days below that level, that is a confirmed indication that we have turned into a bear and that this whole thing at the top of the S&P is actually a top. With that, I'm going to refer to a textbook. Very quick, 1 paragraph. I'll try not to bore you on this. Here's what the textbook has to say about this triple top. Triple tops and bottoms. Just like a head and shoulders pattern, only much, much more rare. Okay, and that's what I just had mentioned to you. Most of the points covered in the treatment of a head and shoulders pattern are also applicable to other types of several patterns, other types of reversal patterns. The triple top pattern, which is what I think we have here after this down day. We'll get a confirmation in a day or two, but if that's it, boy, we're going down. The triple top or bottom, which is much rarer in occurrence, is just a slight variation of a head and shoulders pattern. The main difference is that the 3 peaks or troughs in the triple top or bottom are at about the same level. Well, between 1444.5 and 1447.20, all 3 of these hit. That's a major long chart to have these 3 come in so close. So that right there is one qualifying, we have one qualifying variable right there. Okay. Chartists often disagree as to whether a reversal pattern is a head and shoulders or a triple top. The argument is academic because both patterns imply the same exact thing. Volume tends to die off a little bit up here, and if you look at our volume, it's no higher than it was. In fact, it is off slightly. So they say volume tends to die a little bit at that triple top. Okay, the triple top is not complete until support levels along both of the intervening lows have been broken. Low 1, 1420, low 2, 1412.20. We take that out, we're confirming what the textbook says. Now, here's where they just throw a little, this can almost be a fundamental because of what's going on now. As an alternate strategy, the breaking of the nearest peak can also be used as a reversal signal. So in other words, we have a triple top, and if we take this out and settle twice, 2 times below here, below 1220, we have a confirmation of a triple top and we're going down. But the book says if you take this out, you have a breakout. The only thing that's stopping me from saying it's probably a false triple top and a breakout, it's definitely a triple top, is that the fact that all the money is not poured back into our economy, into the market yet. It's only the first month of the year. If we get enough buying power, you better believe we're going to go higher. But for now, all we have is the beginnings of a triple top formation. As technicians, that's how we have to play it. With that in mind, tomorrow, look for resistance level where you probably want to short the market between 1435 and 1437 in the S&P. That's where I think we're going to have some trouble on the way up tomorrow. If we go up even slightly, I would be looking to get short right there, between 35 and 37. Above 1443 negates any bearish trading, above 1443. Could be your stop level if you want to look at it that way. My feeling is above 43, I wouldn't want to be short any longer. I'm looking for 1421 to 1419, a test of this first trough. If we hit that, I'm going to jump out there. Very good chance they may try to run the stops all the way to 412.20 if we start going down, but I'll probably be out at the 1421 to 1419 area. That takes care of the Emini S&P. You also seen the gold chart. Tell me that's not a terrible rendition. Anyway, the gold chart, up, down, up, down. This 200-day moving average that I was telling you about, we don't seem to get more than 3 days over this before it runs out of steam. The gold's hit 654, 655 3 times along that line I showed you. It's a major resistance line. Gold has a tendency, as I say, to stay above the 200-day moving average for only 3 days and then break. It will only go higher if it's a major breakout. So we have technical indicators telling me gold should wash. We have a major reason saying gold should wash. And although it's not a triple top like this for short-term traders, you have 3 tops. We have some good reasoning behind shorting both of these. With that in mind, let's look at the Feb gold. Now you can trade Feb gold for another day because even if it's in delivery, Feb gold, you can be short gold without worrying about delivery. So short your Feb because Feb has a better chance of breaking than the April does. Feb-April rollover has taken place and we have rallied and got all the way back to that high and then stalled, like the S&P. Only gold won't have half as many buyers in it as the S&P will. Gold never has that much traffic. So, the gold doing that, I smell a rat tomorrow. I say I'm getting short the gold. Put your orders in tonight's market. Sell the gold between 646 and 648. At least that's my level of resistance where I would like to get short. Above 652.20, you know, I'm not staying short any longer if it gets up there. 657 is a real breakout. That's where a reversing buy stop would go if you were actually short and a big trader and didn't mind the long haul. You put a stop above 657. But for us short-term day traders, above 652.20, I would no longer want to be short the market. I think we can get down to 636 to 634, take a nice $10, $12 elevator ride in gold, make back some money there. Hopefully we'll make some nice money in E-mini. This is Friday. We lost a few days in a row. We had the direction pegged yesterday, missed it by a few dollars. Don't give up. We'll come out tomorrow. Maybe we'll knock them clean and get our money back. Remember to keep your stops and always keep your stops and always, always. Because yes, this very well could turn around and make this mess make sense up here. With that in mind, good luck trading tomorrow. I'll certainly give you flash updates on where I'm getting in. You can guarantee this. I'll be shorting it somewhere between 46 and 48. I'll be shorting this somewhere between 35 and 37. I'll flash update you when I'm filled and you'll know where I'm at, and we'll see. You can follow my direction from there. Don't forget, if you're at the YouTube site, hit the subscribe button. Subscribe to us. We'll get the videos out to you just like that. Email me at futuresanalysts@gmail.com. I'll put you on the flash updates lists so you can stay with me during the day as I weave and bob in and out of these markets. Don't forget, place your trades in the overnight markets. And again, don't let these guys take your money for a couple of days in a row and tatty your plan. You're a short-term trader with a long-term plan. So this week's not working. By the end of the year, you'll see all the working weeks we did have. If you've been with us since the first video a month ago, we had a 3-week run where we had one losing day. So we've had a few days losing. That's part of the game. That's part of the trade. Be tough. It's the big boys game out there. Stay with it. Keep your stops in. Watch these two bad boys tomorrow. Good luck trading.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.